Most of the attention on Bitcoin these days is based on the short term price movements. However, one of the biggest opportunities is really around how to use it to build multi decade, multi generational wealth strategies. Welcome to the Bitcoin Advantage, where we explore the strategies, tools, mindsets that help you build financial freedom, protect your future, and grow wealth that lasts for generations. I'm Hunter Albright, and I help people strategically use Bitcoin for the long term and build resilient futures. And excited to be joined by Shane Crockett, who is head of private client services at Salt Lending. Shane, welcome.
Hi, Hunter. Glad to be here.
So, today we're going to explore the question and the problem about how do you build long term wealth? How do you build multi generational wealth in a world of rising costs, eroding purchasing power, and frankly, an unstable financial systems that are globally? Not only we're in the US, but we're seeing it occur around the world. We're going to talk through what you should be thinking about, what you should be learning about, and help you get started with what you should be doing from a planning perspective if you want to build a durable long term wealth strategy. And one of the things that for us in a lot of the conversations that we're having that this really matters is because building wealth is getting harder for everyone. Trying to understand, that traditional assets feel out of reach, inflation is quickly eating away at savings, and currency debasement is becoming more and more real. So as we go through the conversation today, we look forward to exploring these topics with you and sharing frameworks that we use to think about it. And throughout the webinar, we'll refer to a framework. We will have assets and materials that will be available to really help you think about building multi generational wealth using Bitcoin as a core foundational asset. One of the things I do want to disclose as we get started, please note that everything we're going to cover today is meant to be educational. We're here to help you understand the concepts and the frameworks, not to be providing specific financial or investment or legal advice. All everyone's situation is unique, so be sure to consult a qualified advisor before acting on any of the strategies or tactics or recommendation you might be interested in. And then lastly, we really do want your engagement as we go through this. So if you have a question, please put it in the Q&A part of the webinar, and Shane and I will address those as they come up throughout the webinar and live stream today. And then lastly, we're going to cover a wide range of topics. I'm sure there will be follow-up sessions that we'll do that will go deeper. But in the meantime, we invite you to go to saltlending.com, check out the additional resources. And if you go to the private client page, you can book an opportunity to speak with Shane and go into more depth regarding the topics and the strategies that we'll be discussing today. Shane, before we jump into some more of the materials, we'd love to just have you give a little bit of an introduction about your journey into Bitcoin and also the work that you do with people on building out and sort of defining what is and what could be a multi-generational wealth strategy.
Absolutely. Thanks, Hunter. Yeah, I mean, I've been in Bitcoin for 5 or 6 years now. I've been with Salt Lending for almost 2 years. And yeah, I mean, when I think about building generational wealth with Bitcoin, it really comes down to, I think, something that you highlighted, which is having Bitcoin as either a primary asset in that foundation of your asset portfolio, or perhaps it is your core asset, right? That you're really building around, and doing that to get away from some of the things that you talked about, right? The debasement, the some of the complexities with other assets in a portfolio, real estate, stocks, things of that nature, right? Bitcoin is much easier to access. It's much easier to acquire to self-custody. And there's just such a great emerging market of opportunities, financial products, lending, and other things to be able to put those assets to use. It really does just set a great foundation to be able to build a long-term sort of generational wealth strategy on top of. And obviously, we're doing a lot of things, especially within private client, to help people do that, right? To really help them with their long-term outlook, their long-term vision, their long-term goals, and just figure out, how can we help you? How can we fit into that? If you've built that foundational base around Bitcoin and you want to start figuring out how to borrow against it, how to have a long-term vision and strategy that we can augment with our tools, with our people, with our expertise, that's really where my team comes in, obviously, and helps those people do that by looking ahead and trying to do more than just a basic borrow against your Bitcoin, but really looking long-term and trying to figure out how does this fit into your broader long-term strategy.
Yeah, so let's pick up from there and talk about why this topic matters so much. I know that as I've been traveling around and talking with people globally about building wealth, it definitely seems that there is this trend that acquiring assets that have the ability to be used on a longer term strategy is getting harder. Be curious based on what are some of the conversations that you're having and what are you seeing about why this topic matters?
Yeah, I mean, I think just as the market has evolved, right? I think as we've sort of gone from this hodl, right, buy Bitcoin and hold on for dear life, which is great, I love it. It's really gone to this more strategic approach, strategic mindset that thinks more longer term. And really, at the core of that is Bitcoin functioning not just as the HODL asset, like a savings account that grows as opposed to depreciates like dollars, but it's also becoming that collateral asset as well, right? It's not just your savings mechanism that appreciates, but it's now giving you opportunities to borrow against that asset and do so in relatively simple manner, right? Whereas borrowing, margin against your stock portfolio or taking out home equity lines against your real estate is a little bit more complex and not necessarily available to everybody. Whereas if Bitcoin is at the core of your wealth building strategy, those opportunities are a lot easier because that asset is within your self custody. It's global, it's liquid, it's just much easier to utilize as that collateral asset compared to some of these other more traditional assets that you would find in this kind of a portfolio or this kind of a strategy.
So building on that topic a little bit more, Shane, in terms of the conversations that you're having, we were talking a little bit earlier about, I think that we're starting to see three segments of people think about the use of Bitcoin for wealth building. Feels like there's one group that they're, let's call young professionals who are making good money, starting to think about how do they acquire assets to build their wealth, oftentimes because they're being priced out of the housing market. And so they're looking for alternative assets. I think it's the second group I would classify as people that probably already have larger amounts of wealth, but now in fiat denominated assets that are looking for alternatives to sort of maybe distribute or diversify within their portfolio. And then there's family offices and others that have larger amounts of wealth that are intentionally looking about how do I pass this along and encourage that multi-generational view of wealth being. How does that fit with the conversations you're having? Do you see any differences or additional groups with the people that you're talking to?
Absolutely. I mean, we're working with individuals, younger individuals who are looking at accumulation strategies, right? How do I convert my income to Bitcoin? And then how do I put in place financing, borrowing strategies that allow me to borrow against the Bitcoin to live my life? Right? And that strategy is going to be a little bit different than, say, somebody who might be perhaps a little bit older, getting closer to retirement, then maybe they've accumulated some Bitcoin and now they're thinking about, okay, how can I borrow against my Bitcoin to offset the income that I might no longer have because I'm getting closer to retirement? Right. And then back to your point, we're also working with family offices, right? Really trying to maximize the value and the benefit of the Bitcoin that they're accumulating and put that Bitcoin to work, right? Not just hodl it as an investment within their broader thesis, but ultimately utilize its collateral properties, borrow against it, and use that to capitalize on additional investment opportunities, perhaps buy real estate, perhaps invest in more Bitcoin, right? Things of that nature. And, we're also starting to work a lot more with small to medium sized businesses, right? It's the same type of approach, the same type of strategy where you're ultimately converting your, as people like to say, your melting ice cubes, right? Your cash into Bitcoin, and then figuring out how to strategically leverage that Bitcoin through things like, credit, borrowing, lending, things of that nature, and ultimately use that for business related purposes. Maybe it's payroll, maybe it's OPEX, maybe it's additional investments. But it really kind of comes down to the same really kind of three-pronged approach of how do I convert my income, my wealth into Bitcoin? And then how do I take advantage of the value of that Bitcoin through different financing strategies, borrowing, and things of that nature, which obviously we can help with.
Yeah, I mean, I think those are some really good points there. And one of the themes that seems to be coming up more and more is this idea of like how people can and should be thinking about going from sort of what I've been referring to as labor-based income to asset-based income. And really that is, I guess, referring to the concept of trying to just accumulate assets that will appreciate, will help protect sort of the value of your savings, the value of sort of the value of what you've invested in and you've built up over time, and not take that away, right? I mean, inflation is essentially taking away both the labor or the historical labor as well as the time that we had invested in, the energy and the time that we invested in it. And so I think, for me, in the conversations I think we've all been having, is that Bitcoin really becomes a unique asset at this base level that both is easy to get into, it's easier to then be able to tap into its value. Honestly, if you wanted to sell it, that's an option. The market, the exchanges make that easy, but also having more optionality in terms of being able to borrow against it, which creates a very tax efficient way to do it. In a lot of the conversations I've been having, I tend to refer to this as that it's really helping democratize wealth building because it's making available the strategies and the tactics that the ultra wealthy have been using because they've had the size of portfolios or they've had the access to the experts with the tools to be able to do what you were referring to, borrow against stock portfolios, borrow against real estate. But there's some complexity and there's some costs that are in there that if you're just starting out, you don't necessarily know and you're not educated on, that hopefully conversations like this are helping to close the gap.
Absolutely. Yeah, I mean, I use my own personal journey, right? I mean, I think I'm probably more toward the early phases of being able to do some of this generational wealth building, like a buy, borrow, die type of strategy where you've established, some structure, you've got maybe a trust, you've set up the inheritance, planning and things of that nature for your heirs to inherit your assets, right? I'm probably more on the early phase of that where I'm like, okay, if I want to get to that point in the future, what do I need to be doing now? And so, like kind of what you just described, right? I'm figuring out now, how do I convert my income into this asset that I want to accumulate more of? And then how do I leverage some of the borrowing tools, strategies, services, partners, to be able to do that, so I can get from where I'm at today to that ultimate goal of having the asset base and the wealth that warrants putting in place that kind of a structure to inheritance plan and do all those other things.
Yeah, and what are some of I mean, what do you think has really changed as you've thought about it in talking with other young professionals that are looking to get an early start on building multi-generational wealth? What are some of the key recommendations you have or the key topics that tend to be discussed?
Yeah, I mean, I think, I shouldn't say a lot. I think most of this requires a fundamental understanding of Bitcoin, right? You have to understand the asset itself. That's sort of first and foremost. And I think paramount to that too, you have to believe in it, right? You have to believe in where this thing is going, and you have to believe that it really does solve this broader toxic problem of monetary debasement, which continues to erode our savings and increase our cost of living and make savings opportunities, investing, and really just living in general more difficult. And so I think, if you are at that point to where you do understand Bitcoin and you do believe in its future, then I think what's important for people to do from there is really understand, okay, well, what are some of the best practices that are involved with things like borrowing against the Bitcoin? Right? What is Bitcoin as collateral? What is, what's a Bitcoin backed loan and how does that work? Because I think once you can start to understand some of those fundamental properties, then some of these different strategies, some of these different opportunities will start to take more shape as you understand the tools, the services, the partners, companies like Salt, as an example, that can actually help you go from just having the asset to having the asset and the strategic sort of vision and processes in place to tap into that asset to live your life, to retire, to reinvest, or to do whatever the thing is. But to go back to your question, I think it does really start with those fundamentals, right? You have to understand Bitcoin. You have to have, you have to believe in its future. And then I think from there, really kind of understanding some of these different tools, processes, and strategies will start to kind of put better shape to all of these things from a long-term perspective.
Yeah, no, I think those are great points. And so I guess I want to let me transition us a little bit to a framework and see if we can't land some of these ideas and give a little bit of structure around this idea of how to really create sort of a multi-generational sort of Bitcoin or multi-generational wealth plan. So if we look at the sort of the overall goal is this sort of, and we're looking at this being a multi-generation. If I can get my pen to work here, hold on just a sec. Right, we're looking at sort of a multi-gen sort of plan in terms of how to build the wealth. A lot of the conversations I'm hearing is that the first of all, the first challenge around this is that there's an unorganized organized setup, right? Just and Shane, we were talking about this. Like this is really around just unorganized to how to think about the base assets, what should be being acquired, what should be the distribution of those base assets, and how are you thinking about like how that should be personalized? What are the assets that might be in that mix as people start to try to get started in accumulating and building that foundation?
Well, full transparency, I'm all in on Bitcoin, and so I might not be the most, the best person to talk about a diversified asset portfolio. But in terms of people that I'm working with in our private client group, there is a lot of diversity, right? There's basic 60/40 portfolios, stocks, index funds, ETFs, and then bonds. A lot of real estate, right? A lot of people that have built generational wealth portfolios. A lot of that has been done through traditional real estate investing. And then yeah, I think you've got this new sort of asset class, digital assets, of which Bitcoin really has become the predominant leader and the most embraced from the TradFi space, as well as a lot of the alternative asset investing and just the growing popularity amongst retail investors. So for me, it's mostly around Bitcoin. But in terms of people that we are supporting through private client, yeah, it's absolutely diversified. Some people are all in on Bitcoin, right? We've got a family office that we work with whose entire thesis is built around Bitcoin. And there's others where Bitcoin is maybe, 5-10% of their portfolio, but you can kind of see over time as they see how simple it is to utilize the asset as collateral to obtain cash and kind of how easy it is to manage that. You can kind of see it slowly becoming a larger part of that portfolio and broader strategy, just given again the liquid nature of the asset and all of these amazing services that are popping up around it to unlock opportunities to leverage its collateral properties, if you will.
Yeah, no, that makes a lot of sense. And I think that, when we look at sort of coming the challenge of sort of an overall unorganized setup, you start to really see people starting to build what I would refer to sort of as a lifetime wealth foundation. And it really goes across the different assets that you were touching on, and and I think where you put the spectrum of Bitcoin on there is really up to you, from a personal perspective. What level of risk do you want to take on? But some of the things that we start to talk to people about is, one, what should that base asset blueprint be? Secondly, how do you start to think about your own protection system from a security architecture, custody management, backup plan? And then the third element is a legacy structure. So, how do you want to think about the roles that you want people to play in? How do you educate sort of the next generation in terms of you want? And all that for me starts to set up in that base foundation of, okay, I'm going to get committed to a mix of assets, a collection of assets to really have that value. And then how do I protect it and educate people into thinking about it?
Absolutely. Yeah, and I think too, I mean, I do think it's generational. I do think, most of the folks that we're supporting, most of the businesses, they've had more time, just by nature of perhaps being older to earn money, invest, grow their portfolios, and now start to figure out how do I put some of these assets to work. Whereas I think for a lot of younger people, right, they're kind of starting to think, well, do I have those same opportunities? Can I just acquire real estate? Can I invest in real estate? Can I just dump all of my money into a small business, or should I just invest in stocks? And I think because of how the fewer hurdles there are to be able to invest in Bitcoin and self custody Bitcoin and really manage Bitcoin as that base layer asset, I do think that's why we're seeing a lot more young people get involved, is because they realize some of these generational wealth building opportunities that have existed in the past with categories like real estate, stocks, equity, commodities, whatever. Maybe those aren't as accessible to me in today's broader, economy, and perhaps Bitcoin makes more sense to be able to get, build that generational wealth, but do so in a way that's, that actually gives them that opportunity.
Yeah, so Shane, we've got a question that I'm going to come to that we got, and I'm going to move us into really the second phase of the framework, which we've sort of talked about and really thought about it as sort of the 100-year plan, which really I think incorporates a couple elements that are important about it. Is one is how do we think about growth? How do we think about liquidity? But in terms of the question that has come up, it's if you're all in on Bitcoin, how do you think about managing the current price action? And I know that is well, why don't you kick it off about how you think about it, and then we can go back and forth on the strategies. Because I think if you're going to have a multi-generational plan, you've got to have an understanding of how you will approach volatility in the market, and it's regardless of any asset. But Bitcoin does have a higher amount of volatility than a number of the other assets that people tend to invest in.
Absolutely. I mean, I tell people first and foremost, every time I have the opportunity, right, use a conservative strategy. And when I say conservative strategy, that means try to have a lower LTV so that you have a lot more room between your loan and where you might ultimately get stabilized, right? A lot of people, they like to take risk, right? They get 70% LTV loans, and they don't have any dry powder. They don't have any collateral reserves. They don't really have a way to respond to margin calls. And while that is very common, that's not what we recommend, right? So I think first and foremost is just having a conservative approach that allows for Bitcoin price volatility without getting you into a margin call or stabilization scenario. Now, that being said, it is what it is. Bitcoin's a volatile asset. And so if you are putting together a strategy, well, thinking about dry powder, thinking about collateral reserves, thinking about how you'll respond to margin calls to ultimately avoid getting stabilized, that is also part of our strategy, part of the guidance that we bring people, just making sure they're fully educated about how these things work. What is the Bitcoin price where you're going to get a margin call? What is the Bitcoin price where you're going to get stabilized? And how can we go about mitigating those things from happening based on the assets, the resources, and really the tools that are available to you right now? So, and I think just to kind of cap that off, I think this is one thing that Salt does so incredibly well is, well, if you do get stabilized, that's it's not a traditional liquidation. We don't pay off your loan. You just have a loan that's now backed by stablecoin instead of your assets. And we can re-enter the asset position at a later date for you if you would like. And so I think where a lot of people get concerned about getting liquidated and losing everything, et cetera, that's just not necessarily true. I think that's more FUD, more fear based. We think our stabilization helps people avoid further drawdowns, right? If you got stabilized at 90K and Bitcoin falls to 70K, well, we can re-enter the Bitcoin position for you now at 70K, right? But you've got 90K in value, so you actually were able to benefit from getting stabilized, whereas in other traditional liquidation scenarios, you did not.
Yeah, no, I think those are good points. And Shane, as you were talking, I was making some notes here, and I think, as we sort of think about it, you've got these two dimensions. If you think about sort of reserves, how much cash you have sort of elsewhere, either in other assets, Bitcoin, and actually, what's one of the benefits of, at Salt, you can have a multi-currency, sort of loan collateral wallet. So you can put in multiple types of collateral to sort of one, top it up if you need to. But if you add stablecoin in with your Bitcoin, you're also being able to take out some of the volatility just by the design of your sort of collateral wallet. But going to some of the things you were talking about, right? I mean, the most conservative and sort of the most safe quadrant is up here where you have higher amounts of reserves set aside to be able to meet margin calls, as well as you have a low LTV. Now, the other thing I would say in this is be sure, regardless of who you are looking at from borrowing from, make sure you understand when the margin calls happen, and understand what the actions are that would require you to cure or protect you in the downside scenario. I mean, we've had conversations over the past several days with people who are getting margin called, and they get liquidated at 60 or actually 70% full stop, and have no other recourse or even breathing room to be able to address it. And so, especially when you're thinking about a multi-generational tool, it's really important to understand what optionality you have, how is the design of the system set up to protect you, and give you those options of being able to make sure you have a choice for what happens when there's downside.
Yeah, absolutely. Yeah, I think that's sort of maybe it's not unspoken, but perhaps less discussed. I think element to the building generational wealth. Personally, I think that should be done by taking, managing risk in a very conservative manner so that you're investing your cash flow, you're investing your income into the asset, but you're not levering it way, way, way up to try to buy more of it to maximize your upside, right? Because that's just taking on a lot of risk. And given the uncertainty, given the volatile nature of the asset, yeah, you are putting yourself in a situation where you might get liquidated, you might get stabilized, and that's not ideal. So I think to your point, there is sort of an unspoken or perhaps less spoken aspect to this generational wealth building kind of long-term strategic approach of if you're going to take loans against your Bitcoin, do so in a conservative way and have a strategy to respond to margin calls, right? Have some collateral reserves, have dry powder, have a strategy in place, or perhaps even look at something like Salt Shield, which eliminates margin calls and eliminates the liquidation risk entirely and protects you throughout the term of the loan.
Yeah.
So yeah, I do think that is important, right? Is just kind of having a conservative approach and making sure that you leverage the tools, the strategies, the services available to help mitigate that risk.
So let's take a look at some of the other strategies for those other quadrants. I'd be interested in your thoughts on a couple of them. So, if you have a high LTV and you have low reserves, right, that's obviously going to be the highest risk scenario. But the other two quadrants where you might have higher reserves, as well as a higher LTV. I mean, I know I've had conversations with customers who sort of live in this quadrant, and it might be because they have they're taking out a loan only on a smaller amount of their overall sort of assets, their
Yep.
Bitcoin or otherwise, and therefore they sort of are saying, "Hey, I'm gonna be willing to take a little bit of more of aggressive approach on this loan because I may be reinvesting it, and I may be buying more Bitcoin or reinvesting in another opportunity." But I know I've got reserves on the side to be able to meet the margin call should it happen, whether it's with stable coin or it's additional Bitcoin or other assets. What other types of, I guess, strategies and tactics are you seeing from people that are living in that quadrant?
Yeah, no, that's a great point, and that is a very popular quadrant because there are a lot of people who have, they've spent a lot of time, a lot of money, a lot of energy accumulating Bitcoin, and they view as a really like a core best practice, keep maximum Bitcoin in self custody, right? So even if I've got 100 Bitcoin, but I only want to borrow against say 20 of them, well, if I put up 20 of my Bitcoin with a lender like, say, Salt Lending, well, if I have a certain amount of dollars I want to get, that might require me borrowing at 50, 60, 70% LTV, which would be higher risk, right, from an LTV standpoint. But because they've got these additional reserves in self custody, they feel comfortable managing that on their own. They can respond to margin calls quickly and easily. So I do think that, if you do want to have higher LTVs to borrow more dollars against your assets, against your Bitcoin, that's fine as long as you're comfortable managing that risk and you do have the collateral reserves kind of in self custody that you can use to respond to margin calls.
Yeah, no, I think those are great points. And then the other element of this quadrant is where, they're down in a place where they have lower LTV, but they also have lower reserves. So they're really taking the risk out of the loan by the lower LTV and then making adjustments. I mean, I think one thing I think is an important point to emphasize is that you can and you should check the terms with your lender about your ability to essentially rebalance your loan. Do they allow for reverse margin calls? Because from a loan perspective, while you might need to top it up if the price has gone up, I'm sorry, if the price has gone down, when the price goes up, having the flexibility to take some collateral out is just like rebalancing your portfolio if you're moving, sort of redistributing assets across some of the different asset classes. Shane, with some of the customers that you've been working with, how do they tend to use that type of capability to either reset their strategy or think about just managing, the use of their assets over a longer period of time?
Yeah, I mean, kind of just going back to the quadrant quickly too. Where I see this more commonly is people who are maybe just getting started, right? They've accumulated some Bitcoin and they're ready to take that next step in their journey. They want to start, borrowing against it and using that money to augment their income, to reinvest, or perhaps there's a transactional need of some kind, but they ultimately are bringing that low risk conservative LTV mindset, which I'm a big fan of. And that's typically where we do see people using Salt Shield, just as an example, is, I don't necessarily have a ton of collateral reserves, but I do want to avoid margin calls or liquidations. And so the lower LTV, lower reserves are typically where we see a lot of people using Salt Shield. But yeah, I mean, I think that's another thing that I think we do incredibly well, which is just testament to how long we've been in the space and the really really smart people, the smart experienced people that we have working here, is building those kinds of tools to help people rebalance, to help people be able to look at their collateral portfolio, look at their the price of Bitcoin at any given time, look at their LTV and be able to make adjustments on the fly. Maybe the Bitcoin price has gone dramatically up and they want to pull some of the excess collateral back out to self custody. We make that easy. Maybe the value of the collateral has gone up and they want to add more cash to their loan. We make that easy. Perhaps the value of the collateral has gone down and they need to recollateralize to cure their LTV to a safer place. And perhaps they want to do that with stablecoin or perhaps Ethereum, right, or another applicable asset that we accept. Again, we make all of that easy. So I think to your point, those capabilities have been I think a key driver in just our popularity, our growth overall, and certainly within private client, helping people with a lot more arrows in the quiver, if you will, to be able to implement and manage some of these longer term strategies and be able to manage the risk in a way that aligns with their broader, their broader risk appetite and their broader strategy as well.
Yeah, no, I mean, I think those are great points, and it's this balance, and I think this is why the framework is so important, really, to be thinking about. Not only do you have to be knowledgeable and start to think about how do you want to acquire the assets, in terms of that first sort of part of the framework we talked about, building this lifetime wealth foundation, right? You want to acquire the assets, think about how you protect them, what is going to be your custody strategy. We talked about the 100-year growth plan in terms of how do you then going to be able to draw against it, but also think about how do you want to utilize it for growth, because it's not necessarily, it's this balance between, I would say, hodling, borrowing against it for liquidity, but probably also borrowing against it for reinvestment opportunities that come up. I know we work with a lot of customers that are borrowing against it to reinvest into businesses, because that is an asset, right? As if you're an entrepreneur and you want to build a business, you have a lot of control. There's other capabilities and flexibilities that you have by owning a business to be able to leverage the liquidity and the value that you're creating there. And then the third one I would call out is the multi-generational just sort of philosophy and plan. Like, how do you think about educating the next generation or the heirs of the assets about how you want the fund managed? What are, when you think about that framework as a whole, what are some of the challenges that you see people facing, in terms of trying to put together that overarching roadmap, if you will?
Yeah, I mean, I've spent some time with a couple high net worth individuals who really wanted, they wanted to figure out how would I layer a lending relationship, a loan facility into my longer term, buy, borrow, die strategy where, a father, perhaps grandfather, has accumulated some assets and Bitcoin fits into that portfolio. And they're going through the motions of trying to understand, okay, how do I set this up? The people that seem to really get it and be further ahead have, they've worked with the legal, tax, financial professionals to understand, okay, what's the appropriate structure here? Do I need to set up a trust that includes my heirs and beneficiaries? And then, of course, how do I incorporate these assets with that trust or whatever the structure is, so that I can continue utilizing those assets, right? Perhaps borrowing against those assets to invest, reinvest, things of that nature. So I think where I've seen people, best prepared, best equipped, they've understood those things at the structural level, right? They've already made the commitment to invest in Bitcoin as a foundational asset within their broader portfolio. And they've gone through the lengths of understanding, okay, if I do want to have an inheritance plan, if I do have heirs and beneficiaries, how does that all work, right? And I think the couple folks that I've worked with that seem to really be ahead of the curve, they've gone through all of those things. They've set up the trust and estate planning and all of that, and are now looking to actually take advantage of the assets that are ultimately owned by that structure and put them to work.
Yeah. And we had a question come in about sort of which family offices are investing in Bitcoin. I think, you know, while we can't, we're not going to disclose any individuals, what we can say is there's been big trends. I mean, we've had a dramatic increase in conversations with family offices that have assets and want to get exposure to Bitcoin. And I think it's an interesting point. I'd be curious on, Shane, some of the conversations that you're having. I was just at a conference where we were talking about the different types of exposure that people can get to Bitcoin. And I think family offices and companies are now really thinking about this. There's obviously, you can buy ETFs and get exposure to Bitcoin that way, but as the price goes up, you have increasing fees. Part of that, you also have limited ability to move it, because you're really constrained to the country and to the markets that you're buying those ETFs in. compared to then getting exposure by basically buying spot. And then when you buy spot, you're actually buying the Bitcoin. I think then there's this question of how do you want to custody it, and just by doing that, you just have more optionality.
Yeah. Yeah, the family office space is fun because, they're always curious and willing to have conversations and interested in different investment strategies, but they're all so different, right? I mean, some of them are a little bit more willing to explore alternative investments, alternative assets. Others have built their entire thesis around Bitcoin, right? But others are looking much more at basic real estate, right? They're real estate, working with real estate developers, real estate asset managers, things of that nature, and really looking at more conservative returns of 8 to 12% annually, whereas others have really built their entire investment thesis around Bitcoin. Right? They understand the risks, they understand the long-term upside, they've done the research, they're bullish, and they really subscribe to the problems that Bitcoin solves. So what's interesting with family offices is just it's kind of like going back to the spectrum of your Bitcoin investors as well. Some people are highly conservative, and Bitcoin makes up, say, 0% of their portfolio, right? They're still not quite there. Other people are, all the way in, like Michael Saylor as an example, and strategy, where their thesis is built entirely around the asset for all the reasons that we're well aware of. So I think the family office landscape is just going to continue evolving. I just think they're a little bit slower to move, and they're a little bit later to move. They want to see it be adopted and kind of see it proven out within their respective market first. Kind of like a bank, right? Like banks aren't necessarily the first to adopt technology. They want to see it proven out first, so they tend to be a little bit late to the game. I think family offices are a little bit similar in how they adopt and really truly start to invest in certain asset classes and asset categories that might be, that might come up over time.
Yeah, and I know a lot of the conversations that I've had with family offices, some of the themes that it seem to be coming up more and more now is just some nervousness about, in particular, assets and holdings within the portfolio around that are in US dollars, and trying to sort of get ahead of both making sure those investments are outpacing inflation, but also having a little bit more worry about sort of any potential debasement. And so they're looking at different asset investment strategies, both things that are domestic and international, but also looking at Bitcoin now more as I would say, an asset class that they have more confidence in, to be able to, one, to invest in, and then be able to do more things with once they own it.
Yep.
And I'd be curious with some of the conversations that you're having when people do own an amount of Bitcoin and are then looking to reinvest. I think it's one of the advantages of being able to sort of borrow against your Bitcoin. How do you see them diversifying their investment strategy, and how do they tend to manage it or structure it?
Yeah, I mean, the family offices that I've talked to, and I was at that conference a couple weeks back, and again, the landscape is really wide in terms of the appetite, because a lot of these family offices, they're managing significant amounts of wealth, and it's a lot of it is really asset and cash based, right? They've already generated the wealth, and now they're really more focused on, how do I protect it? How do I preserve it? We don't want to just sit in cash. We know cash is inflating. We don't necessarily want to we don't want to be overexposed to bonds. We know what's happening with the continued printing and deficits, et cetera. And so a lot of it really is more conservative. Like, well, how do I outpace inflation and, say, a traditional 60/40 portfolio, but how do I not also get overexposed to something that might be volatile and put me at risk? But the successes that we have had with family offices, I think have really come down to those who are either kind of dipping their toe in the water and willing, they've accumulated some Bitcoin, they've kind of done that, they've done the research, they're comfortable, they like the forward looking prospects for Bitcoin as an asset class, and now they're starting to explore different lending facilities and structures and durations. How do I put this to work for, say, a 3 to 5 year period? What does that look like? And how can I diversify my risk out of this? What services are available to me to be able to do that? And then there's also been a couple family offices who are very bullish, right? They do have a higher appetite for risk. Bitcoin does make up a larger part of their portfolio, of their thesis, and they're looking at, okay, now how do I put this to work for me, right? They really are looking for the upside. They really are going after the growth, as opposed to a more conservative, like, how do I just outperform, inflation, or perhaps the S&P or gold or whatever it might be. We do have a couple who are saying, no, I really want to maximize my exposure and maximize my upside, but do so in an intelligent way that allows me to accommodate for the volatility and accommodate for the risk of the asset class as well.
Yeah, and by leveraging it in a smart way, people are able to get real advantages of sort of tax efficiency, and some of those gains then offset or provide a cushion for maybe some of the both the cost of the services as well as any other fluctuation of the assets that they might be reinvesting that cash into.
Absolutely. Yeah, and I mean, I think that's that's one thing we've done extremely well within private clients. You've seen the work that we've done on just our willingness to, look at longer terms, right? Look at different financing structures, right? And that's why private client really starts with a concierge, a meeting with me, like, about, well, who are you? And tell me about your thesis, your long-term vision, your strategy. Let's talk about your risk profile, and then let's talk about what you're trying to do with your Bitcoin, right? And then we try to put together a solution that might be more tailored to that individual's profile based on what they're trying to achieve for the timeline that they have in mind, right? And so that's where I think we've done well with some of the small businesses, family offices, high net worth individuals, is saying, well, let's stop and first understand who you are and what you're trying to accomplish, and then let's see if we can go to the menu, if you will, of different options that Salt has: structures, terms, rates, durations, etc., and put the right solution in place that fits, again, your risk profile, your timeline, and your longer term strategy.
Yeah, no, I agree with that. Now, curious, as we're getting to the end of the time, I mean, you've had lots of conversations with people in terms of thinking about wealth building, thinking about generational wealth, whether it's individuals that are just getting started on that path, or high net worth individuals and family offices that are now really saying, I want to really help because I'm worried about the future. I want to help set up a structure for their legacy for multi generations. What are some insights you've gained, and maybe three practical recommendations you could make that you would think everybody should investigate or maybe even try?
Yeah, I mean, if if you've landed on Bitcoin as part of the generational wealth building asset and the broader strategy that follows that, then I would say, first and foremost, kind of going back to our conversation earlier, understand how lending in this market works. Understand who the lenders are and what they do and what they offer and what LTVs are, and really just get a grasp on the fundamentals. Because I think if you are trying to take advantage of Bitcoin's properties as collateral, well, then you're going to have to get comfortable with what that means, as far as allowing another third party to custody that collateral throughout the term of the loan, right? And so I would encourage people, first and foremost, like, that's probably the area to spend some time getting comfortable with. And then I think from there, understanding the different best practices, understanding the different strategies and the ways to manage risk. Because at the end of the day, people want to avoid, having their Bitcoin sold to pay off loans, liquidation, stabilizations, things of that nature. And I just think, there's a lot of competing ideas about the different strategies, the different best practices, the different ways to avoid those things from happening. And so I think, as really, kind of a second prong in that broader strategy, you really should understand those things and have a sense of, okay, how does this impact me, and how does this impact my goals, and how does this impact my, risk appetite, if you will. Um, And then lastly, I just think, if you're kind of thinking about how to get started in all of this, like you're not quite sure, you like Bitcoin, you're hodling, I would say, keep stacking, right? I mean, keep on stacking. If you've already made that decision and Bitcoin has become the foundational asset that you want to build around for the future, I think that's probably the first thing that you should be doing, and just continue understanding, okay, what are these other opportunities? If I eventually want to have an inheritance plan, what does that look like, right? How do I even get involved in that space? Who can help me with those things? And as this space matures, as the buy borrow die strategy, narrative, conversations continue to evolve, there's so much information out there, right? And with the access now to large language models and chat GPT and everything else, nobody's ever too far from information and having their questions answered in some capacity. So I just think it's important to continue learning, right? And I think if you're at the point where this is something that you want to do, you want to explore, we will happily schedule time with you to go through your scenario and kind of understand how we might be able to help.
Yeah, no, I love that ending point about just stay curious. I think the space is evolving. There's a lot of new innovations that continue to come out. I think we're excited by the institutional interest in the whole space, and are expecting longer term loans to become available, and sort of as more capital comes into the space, which I think will drive another round of innovation and exciting products for people that are starting to think longer term. And I'm would encourage anybody to take a longer term view of this. Don't think about it as sort of just an asset that has interest and value from a day trading, near term trading, but how do you incorporate it as a longer term asset, in a portfolio, in a wealth building strategy, and in a multi generational plan? Shane, as we wrap up, how can people get in contact with you? Where can they find out more about you and how you might be able to help?
Yeah, I mean, we've got some information published on the Salt Lending website under private client. So there is some basic information there about the different services that we offer. There's a page there people can fill out if they want to book like a 30-minute consultation with me. They can also, reach me on email, shane.crockett@saltlending.com. Happy to schedule time with anybody and go through any of this and see if we can't put something together for you.
Well, Shane, this has been great, and I hope you have enjoyed today's conversation around multi-generational wealth. It's something we're spending more time talking to people that are curious about Bitcoin, really interested in how they take control and be proactive in building their own wealth. I know every time Shane and I sit down and have these conversations, new ideas come out, and we have a deeper appreciation of really what people are looking to do, and trying to be as helpful as we can in the process. Would love to have your engagement, both in terms of appreciate the questions that we got throughout today. If this has been helpful, please like and subscribe and add comments on YouTube. We're working to get more educational materials out to help everybody answer the questions that are most important with you as you think about how to take advantage of Bitcoin as an asset class and what that means for you. As Shane said, you can visit saltlending.com to get more resources as well as book appointments, where you can go deeper with members of the team, such as Shane, about how you can integrate lending into a strategy that fits your profile, whether it's growth or whether it's liquidity, and have the right level of risk management that's associated with it. And lastly, again, we appreciate your involvement and your support. And until next time, remember, it's your wealth, it's your rules, and there's the Bitcoin advantage. Thanks, everyone.